you have to understand the higher time frame market structure and scale down to the lower time frame market structure to align them together. An example is using Euro US dollar. And on Euro US dollar, already you all know that the 12-month time frame is bullish. You can see that the 12-month time frame right here is bullish. Now, despite the fact that the 12-month time frame is bullish, if we go to the monthly time frame, you can see that the monthly time frame right here has consistently been creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows right here on the monthly time frame. So there hasn't been any significant break of structure on the monthly. So now, like I said, this previously in one of our sessions, the market structure starts changing from the seconds time frame to the minutes, to the hour, to the day, to the week, and then to the month, and then 12 months. So it starts from the smaller time frame and gets to the bigger time frame. So right here on the monthly time frame being a bigger time frame, the market structure right here consistently creating lower highs and lower lows. Now, going down to the weekly as well, you can see that on the weekly time frame, I have the overall swing high, overall swing low, and right here, even within this range high and this range low, right here, we're still creating lower high and a lower low, a lower high and a lower low, right? But then when you scale down to the daily time frame, you can see that on the daily time frame, right here, we were on a downtrend on the daily time frame before we broke structure right here on the daily time frame, broke structure here, and price came back for a retest. And after coming back for that retest, right here, after coming back for that retest, broke structure here, came back for a retest. Now, from the smaller time frame, we've switched to bullish, but you can remember the monthly is still within the bearish high and this low right here. But the daily is already showing us a shift in market structure, lower high, lower low, a higher high, potential higher low. So we need to create a new higher high for here to now be an actual higher low. Now, before we create this new higher high, there's going to be a lot of stumbling blocks, a lot of manipulation. How do you figure out what to do? So now if we go to the 8-hour time frame, let's take this back to Rwanda. So if we go to the 8-hour time frame, on the 8-hour time frame, you can also see how we were trending to the downside, creating lower highs and lower lows, a lower high and a lower low, a lower high and a lower low. And then we'll eventually broke structure to the upside. After we broke structure to the upside, look what happened right here. We created a lower low, a lower high, a lower low. Now, within this range low, range high, we created this bearish leg, and then we broke structure, broke the structure of that bearish leg. And after breaking that structure, what do we expect to see? A retest. What are we going to retest into? Last and close candles. This was the last move to the downside before a rally that broke the structure. Inside here is our point of interest. This is an 8-hour time frame. What time frame do you want to see a break of structure for you to start looking for a buy? Hey, Leo.
50 minutes.
Yes, exactly. It's the 30 minutes time frame because you're counting from
No,
three
4
lower
hours.
time frames, 3 time frames that are lower than 8-hour. And the only time frames that are lower than 8-hour from here is 4-hour, 1 hour, and 30 minutes. So you count 1, 2, 3. This is the third time frame. So what you want to see inside here is a 30 minutes break of structure. So once you see a 30 minutes break of structure in here, you look for opportunity to buy this, targeting this. What is resting right here?
Low resistance.
Exactly. A low resistance liquidity. So you target that low resistance liquidity for price to sweep those highs. And don't forget, we also have our overall drawn liquidity. So all we're looking for is an opportunity to buy this and come in here. This right here is our draw on liquidity. What is the draw on liquidity? It's a magnet attracting price to a certain location. The reason why it's essential to understand where is your draw on liquidity is because when you're taking trades, you already have it at the back of your mind where you'll be taking profits, where you'll be scaling out. You need to have an area of interest to enter. You need to have an area of interest to exit.